gold, you include platinum, palladium, even some of the specialty metals. Silver is the only metal that is still below its 1980 high. You can't say that about any other metal. And then you factor in, even using, let's say, US government inflation numbers. And the inflation adjusted price for silver from 1980 in today's dollars would be about 170. So we are at 35. So it would need to reach 170 in inflation adjusted dollars. And that's the fair way, frankly, to look at it, to get back to its high of 1980. That's a long way from here. We're talking about, 5-6 times at least.
What can we expect from the silver market for the rest of the year 2024? Today with me is Peter Krauth. He is an absolute expert when it comes to the silver industry. He has all the insights that we need as an investor, and he is also author of the book The Great Silver Bull. The book is also available in my mother tongue in German language. I'm happy to link the English and the German version below the video, and he is also author of the silverstockinvestor.com newsletter. Peter, first of all, thank you very much for your time. It's the second time on our show, and it's great having you back here.
Yeah, and thank you so much. It's a pleasure for me, and I'm happy to be back.
Sounds very good. So let's talk about the macroeconomic side first, right? Last time, I think it's like 6 or 7 months ago, we talked about a potential second wave of inflation. But since then, the Fed actually did a rate cut. Inflation came down a little bit in most of the economics in the world. Do you think the Fed has now ultimately won the fight against inflation? Are we at the end of the road and now ready to go with lower rates? Or are you expecting higher inflation rates quite soon?
So I expect higher inflation. I would not say soon. I guess it depends on, anyone's definition of soon, but I certainly don't feel that they've won the fight against inflation. So it's interesting that, if you look at, and apparently when they look at inflation numbers, their priority is what they call core inflation, and they leave out the more volatile things like fuel and I believe it's fuel or energy and housing, that kind of thing. And they concentrate on what they call core numbers, and the core numbers are still around 3%. So they're cutting and starting to really cut quite dramatically when core numbers are still above their stated target of 2%. So core is still really around 3, has not really gone below 3. So I find it interesting that they're cutting so aggressively, and I think likely to cut again quite aggressively and to continue cutting. And I have, when I do my research, I've got I put together a chart of the CPI in the 1970s versus the current, the last few years. And you look at this first big wave in the 1970s. So you had inflation rise up considerably, fall back again, but it never fell back to the previous low. When it bottomed at a higher low. I think that's what we see happening right now. And if you look at what happened in that, it's hard to project, of course, but there was about a 12-month delay or so before things started to finish bottoming and started to rise again. I think that we're in that kind of environment. We could be as little as maybe 12 months before we see inflation start to meaningfully rise again. And I think that the rate cuts will have a lot to do with, making money easier, more accessible, and therefore, more stimulative, and therefore inflation starting to rise again. I think the 1970s had 3 big waves of inflation. Each one had a successively higher peak and a successively higher low. I think we're in for something similar this time around. We've probably got at least another decade of serious inflation.
Yes, I also think the inflation is here to stay. And if we look at the world, there are so many things happening, right? The war in Israel, for example, I think the second inflationary wave in the 70s was also due to the oil delivering problems, also due to war in this region. So we do have another similarity here to the 70s, which is definitely something to have a look at. And many people, in my opinion, are really ignoring what's going on in the world and different things that could definitely drive the inflation and also the prices of precious metals, right? Let's talk about the Brics in this regard, for example. The Brics, Brazil, Russia, India, China, and South Africa, and also some other new party members. They are definitely not with the Western part of the world anymore. They want to do their own things. They want to go away from the US dollar. This is at least what we see from our point of view. And now the Brics just finished their meeting a couple of days or weeks ago, and apparently they talked about a potential new commodity exchange or a gold exchange in Russia. So let's talk about this potential new exchange. I mean, we do have the COMEX, we do have the LBMR in the western part of the world, we do have the Shanghai Gold Exchange in China. What is your expectations from another Russian exchange? Would it make sense for the Brics? Would it shift the precious metals powers into the east? What is your feeling here?
I think it does make sense because if you look at, where gold production is quite spread out around the world, contrarily to silver, it's more evenly spread out, and so you have many of these countries, China, Russia, South Africa. Just think of those three. Brazil, that's four out of the out of the five Brics. India is really the only exception out of those five large countries that are big gold producers. So why not? I mean, they would be dealing with each other. They all have demand to sell, to buy gold, for example. Makes very good sense to me. Why bother being subject to the rules of the rest of the world that, for whatever reasons, are hostile in some ways to them? Makes sense. Let's set up our own exchange. We don't need to deal with much of the West, in quotes. And so, especially on that matter. So absolutely, it makes sense. I was just reading, in fact, I think it was yesterday, that China is looking to expand its own gold exchange. They're looking to, they've been in talks with Hong Kong, with Singapore, with, I forget, there were a couple of other Eastern nations that they have certain, affinity with, I guess, or closeness. And they're looking to make their gold exchange more of a global physical exchange. And that's what I find interesting, is that, the Shanghai exchange is set up, and I'm not an expert in it by any means, but my understanding is that it's set up very much more as a normal exchange for delivery, as opposed to just trading mostly paper in terms of the value of the underlying metal. A lot of deliveries are taking place in that exchange, and so they're looking to become more of a global exchange. I see lots of reasons. They have a lot of reasons. The majority of, especially the BRIC founding nations, to set up their own gold exchange, and I could certainly see that happening.
Great. Can you maybe tell us a little bit more about the differences between the COMEX and LBMA, which is not delivery driven, as you said before, and the Shanghai Gold Exchange? I've seen a couple of your presentations in the past. You were talking about the differences, about the holdings, especially in the exchanges. Can you give us some insights here?
Yeah. So again, as I say, I want to preface this by saying I'm certainly not an expert on futures or the exchanges. I look at the basics of it, but what I do know is that, for example, a lot of the silver is held in London for silver ETFs. If you look at both the LBMA and the COMEX, they, I believe, compared to, let's say, the Shanghai gold and silver exchanges, they are meant for paper trading, really, for people to buy or sell leveraged contracts on the silver price. And there's also what we call registered silver, which is, the numbers, to my best of my knowledge, are a fraction, maybe a quarter of the silver that is technically physically there and available for delivery. The registered silver is the only portion that is actually available for delivery. Apparently, it's a quarter of the total. And some of that, in some cases, like in the LBMA case, is allocated to the silver ETFs. So if you look at the actual silver that people could actually take delivery of, it's a very, very small fraction of what is on deposit at those exchanges. Very different, in my understanding, from Shanghai, where I believe that the bulk of the metals there are available for delivery, and they're used that way. I think that a lot of the consumers of those metals actually, get their supply by accessing those exchanges. So it's more of, I think, what we know of as a typical traditional commodities exchange market.
Okay, thank you very much for explaining differences. And to me, that means a little bit if the eastern part of the world is really taking the let's say the pricing for precious metals, then the pricing could or the silver price may go up, as we know the silver prices are manipulated on the paper markets here in the western part of the world. And if we see the prices reflected of the really underlying asset, meaning silver, which is being mined underground, for example, processed and then being sold into the industry, meaning silver has a real use and it's not just a commodity on a paper, then that could potentially give us higher prices in the silver market, from my understanding. Let's stick with the industry for a second, and also with the Brics, and talk about India. What's the role of India in the silver market? They did import a lot of silver, physical silver, in 2024, I think especially for the industry and not just for paper trades. Can you give us a little bit more insights on India here?
Yes. So in fact, I was just reading some research yesterday about India, and their imports have just absolutely soared. They cut back, I believe it was in June or July, they cut back on their import duties. And so imports to India have soared. I'm looking at some charts actually right now. So far this year, and that only includes until the end of, I think it's up until September. So the first 9 months of 2024 have already surpassed all of 2023. And 2022 was, I believe, a record year. And so what we've seen is that now gold has gotten naturally considerably expensive, depending on how you look at it. They have obviously a very strong affinity to gold, but because they're starting to find it rather expensive, they're starting to turn their attention a lot more towards silver, whether it's the silver itself or gold-plated silver. So of course the items are less expensive because the majority of the item is made of silver. And imports have been off the charts as well. Year to date, 2024 has already doubled all of 2023. So I think part of that, so there's a big portion of that's retail. I think a lot of it is also the fact that India is starting to look internally in terms of their energy needs. And there was an interesting report by the International Energy Agency that said that India was going to be, over the next 30 years, they'd be the country with the single largest growth in energy demand of any nation. So that's pretty considerable. That's quite a statement. We also know that their solar manufacturing capacity, if you compare it to China, it's tiny right now. But given that it's a place where there's a lot of sun, where they're trying to move towards renewable energies as well, we know that they have huge demand growth. We know they have a big tech and data and software industry. So they, I think, will grow their solar demand dramatically. They have They already have announced a solar park. It's going to be 5 times the size of Paris, and most of that will be solar. It's a renewable energy park, to be fair. Most of it, however, is going to be solar, and the projections for solar manufacturing capacity are that it will grow dramatically in India as well. So right now, there's still only maybe about 5% of what China is. China is still, by far the 800-pound gorilla, as we call them proverbially. They dominate about 80% of world solar manufacturing capacity, but India is at about 5%. I see that changing a lot, and I think that a lot of the very, very strong imports of silver into India are a reflection really of both the industrial and the consumer side of things. They're really starting to need a lot more silver, and of course, cutting silver import duties considerably a few months back has just led to even faster and more imports of the metal. So a big consumer, I think, definitely one to watch.
Yeah, definitely. It sounds to me like there's another big player on the silver market now, which could also be a potential driver for the silver prices. Silver is trading currently way above the $34 mark, far away still from $300, but it's getting closer to its all-time high at the $50 level at least. What does it need from here to get to a new all-time high, Peter? Are you expecting, for example, like a one-time event like a silver squeeze again, or are you expecting steady higher prices? So what are your expectations when it comes to silver within, let's say, the next 6 months?
I mean, I don't know if we'll see a squeeze within 6 months, but I do think that within maybe the next 12 to 18 months, it's something that's very possible. The reason I say that is, I track what happens. We just talked about the inventories, and I came across an interesting quote, which was by a group out of New York, actually a fund manager who used to run one of the world's largest commodity funds, and his name is Leigh Goehring, and he has I mean, people think I'm crazy with my $300 target price on silver. His target is $500. He has, a huge experience managing and trading commodities, and he just thinks that silver is set up like uranium was. And basically, what they're saying is that they became uranium bulls about 5 years ago when they saw that the uranium had slipped into what they called a structural deficit. And so the uranium, the nuclear power plants, for example, had started to tap into secondary supplies, and they were draining those secondary supplies to meet demand. Well, if your production is flat or falling, and you have secondary supplies and you're relying on them, they're going to be drained as well. They can be drained of course, at, let's say, more or less spot prices, because there's no pressure. You can just tap that supply and everyone's kind of happy. The market is happy for a while. But eventually these secondary supplies run out, and then you have to produce more. And so I see an almost perfect parallel with the silver market. We have secondary supplies. We know that silver mining plus recycling is flat. It has been at a maximum of about 1 billion ounces a year, and yet demand is 1.2 billion ounces per year. So this extra 200 million ounces of demand has to be met somehow. And so my conclusion from my research is that, and we see it when we look at the futures exchanges that have silver inventories, they've all been dropping very steadily since the early part of 2021. So I believe the large consumers are going to these markets and getting their silver, and so that's not necessarily putting upwards pressure on the silver price. But these inventories only last so long. And some people will argue, well, there's a lot of silver that's held privately, right? Which is another large supply. And so if the price is high enough, a lot of that silver will come back to market, and that will help to supply the market. And I agree with that. That is certainly a realistic scenario. However, there are two parts to that. What price is sufficient for people to let go of their silver, to sell it back into the market? And what kind of environment will we be in economically that people will still be willing to sell their silver if they see that inflation is rampant, silver prices have moved up, they feel the need to hold things that protect them against inflation? I'm not so convinced that people will be willing to part with their silver, sell it back into the market in sufficient quantity to help, keep the market balanced, so to speak. So I think the odds are there that we're going to get a squeeze. There was just an interesting report from the Silver Institute, I think only about a week ago, that said that they believe that the only way for the market to stay sort of balanced or to meet this surplus of demand is by drawing down on these secondary supplies for the next few years. So because silver supply from mining, they believe, will not improve, will not increase. In fact, S&P Global Intelligence put out a report saying that they believe that silver from primary silver mines, so mines that mostly produce silver, so 75% of silver comes from mining other metals, actually. It's a byproduct. Only 25% of mined silver actually comes from primary silver mines. S&P Global Intelligence believes that in 2 years, in 2026, we're going to see a peak of silver from primary silver mines. It'll actually start to fall from that point forward. So we're not getting more, we're not growing silver production at all. And so the silver is going to have to come from somewhere. We're going to keep draining the secondary supplies. We have to either get the silver from mining other metals as a byproduct, but the supply is getting very, very tight and demand is not slowing down. So I think a squeeze certainly is something that is in the cards.
Well, to me, it sounds like it's only a matter of time, right? I mean, we are in a structural undersupply for years now. We do have higher demand. We talked about India, for example, in the silver industry. And also, I think you had a really, really good point there when it comes to the silver in private hands. At what price level are the people giving back their physical silver? We talked about it before our interview. In Germany, we have 19% VAT on a silver coin, on a bullion, meaning you need way higher prices for even the German retailers to sell back their silver because they want to make out some money out of their silver and don't just get to the break even. So think at the silver price level now at 19%, and this is the bare minimum for a German physical investor to give back the silver to the markets. But we already touched on the silver mining industry, and I think this is a really, really interesting topic because silver, as you already said, is a byproduct, and we haven't really seen large silver M&A transactions actually for years. But now, within the last few weeks, actually, we've seen two of the largest M&A transactions in the whole silver industry. We had First Majestics and we had Karora Mining adding, I think it was total $2.7 billion in M&A transaction within like 2 weeks. Is this what we need in the silver industry? What else is the industry waiting for to have higher prices in the silver stocks?
Yeah, I mean, that's definitely a big part of it. And I've been saying since probably a year at least, maybe a year and a half, that this cycle was coming, that we were going to start to see the M&A happen because, as we say, as I've just been saying, the miners are unable to increase their output of silver. So if you're a large silver producer and you want to grow, you're having a hard time doing it by I mean, you can find some silver, but to ramp up is difficult. And so the simplest way is to go out and buy. And, with interest rates relatively low, borrowing is relatively cheap. And so they can go out to some extent and do that. And they can buy competitors and consolidate. And so, the first wave also makes sense that you see consolidation among some of the larger players because they're the ones whose share price does best first. If you look in the range of, let's say, large producers, mid-tiers, developers, and juniors, when the silver price moves, the large producers do well first because the retail investor, the generalist investor who's not necessarily specialized or paying that much attention to precious metals or silver will go to the large producers first. It's the lowest risk. And so their share prices move up first. So, it's interesting to look at it this way, that their share prices move up, which means that it's as if they can use their share price, which is now at a higher level, as a currency to allow them to go out and buy competitors using their shares. So they can, instead of perhaps in some cases paying cash or borrowing, they can just say it's going to be, we're going to issue shares and we'll do a takeover, for all share takeover, for example. And they can do that more easily now because their share price has moved up. And that's part of what we're seeing. As I say, it makes sense to see this early. The problem with the silver space is it's so small. And so it becomes more difficult for a manager that wants exposure to silver because we've just gone, let's say in the last, like you said, the last few weeks, we've just gone from maybe a handful. I'm going to guess, if we look at, listings on all the different exchanges, and we're kind of generous, maybe there's 8 or 10 large-ish silver producers. We've gone down by 2 in the last. That's a really small pool. So I like the transactions, to be honest, that we've seen, because First Majestic has now, for example, by buying Gato Silver, has bumped up their revenues from silver, so they've become a more of a rich silver producer. The same thing actually happened with Kerr Mining, having bought Silvercrest, also bumped up their overall revenues from silver, because both have considerable revenues from gold. So they're becoming more silver focused, and I think that's a good thing. And they're also becoming, because they've both bought very cash rich and cash producing companies. So they're helping their balance sheet. They're becoming healthier. They're producing more silver. I feel these have been good moves overall. So the question becomes, what's next? And I think what's next is most likely moving down the food chain to perhaps sort of mid-tier producers, and then developers, and then explorers. And so, it's more or less textbook, playing out in a textbook fashion. As I say, it's been somewhat predictable, and it's been good for the companies that were acquired. But I think even the acquiring companies are going to make for good plays long term in this space.
Yes, definitely. It's a really small industry, as you have said. And we always view it as, let's say, a train. This is still in a train station, right? We are still at the beginning of the really big, let's say, investors coming into the silver industry. But once they are coming into the industry, in the small industry, we will see the train moving, and it's hard to catch up once the train leaves the train station. So thank you very much for this statement, Peter. And maybe in the end, we can summarize a little bit, right? We've talked about many things: inflation, rate cuts, geopolitics, Russia, a potential new exchange for metals like silver. But we still have people that are looking at the silver price and be like, well, it's not that high, and you people are talking about silver going up to $50 again for so long now. What would you say to these people? Why do you believe that we are in a different era right now?
My target for this year, so we're almost there. I've been saying for a few months, I think we could see 35 this year. We're in the third quarter already. And I think next year, realistically, $40 is very doable, perhaps higher. But the last time we were at these levels was something like, I believe it was May of 2012. So that's 12 years ago. And we were we were crossing $35 from the top side. We were going down from higher to 35. Now we've been all the way down to $12, at an extreme point in March of 2020. And then we went to 32, I believe, in August of 2020. We've been in a range ever since, a wide range, but let's call it 20, 25, or no, say low 20s to maybe 32 ever since then. So that's 4.5 years. We've now made it meaningfully above 32, which was the ceiling since August of 2020. We're meaningfully above 32, and we're also holding above 32. For me, that's very significant. I think that we are now in a new phase where, for the most part, I'm not saying this is certain, but I think that we can mostly probably hold the 32, and this should become a new floor for the price. And 32 is still very, very, very cheap. I mean, think that in 1980, we were at $50. Today, we're at 30. It's the only metal, if you include all the main base metals, copper, lead, zinc, nickel, and then you include the precious metals, gold, you include platinum, palladium, even some of the specialty metals. Silver is the only metal that is still below its 1980 high. You can't say that about any other metal. And then you factor in, even using, let's say, US government inflation numbers. And the inflation adjusted price for silver from 1980 in today's dollars would be about 170. So we are at 35. So it would need to reach 170 in inflation adjusted dollars. And that's the fair way, frankly, to look at it, to get back to its high of 1980. That's a long way from here. We're talking about 5-6 times at least. I think it can do a multiple of that. I've spoken to true successful experts in the silver sector, who not only are analysts and researchers, but have had huge success with resource companies mining silver, bringing them to market, public companies, and so on. And they see absolutely no problem for us to reach a point where we're at what they call triple-digit silver. So that's $100 or higher. So I think bottom line, people, what they need to retain is that $35 silver, let's say, is still actually quite cheap. That's the takeaway from this. It's still cheap. You have not missed any boats. You have not missed the train. You can still get on, and you probably should still get on. Doesn't mean you have to go crazy and overload with silver, but have some exposure to silver. And if you have, the appetite for it, silver stocks, you don't need to take huge risk in silver stocks either. In my book, I point out to 2 examples. The largest public silver producer is Pan American Silver, and the largest silver or mostly silver royalty company is Wheaton Precious Metals. Both of these companies, so Pan American, over a span of, I think it was maybe 6 or 7 years, was a 1,600% return. And I think it was Wheaton Precious Metals over the span of, I think, 3 years, 2008 to 2011, was a 1,700% return. These are the largest market cap companies in the silver space, and those are the kinds of returns you can get from those companies. So as I say, you move down the chain, the leverage just goes crazy, as the risk does. So that's not a necessary, but people, I believe, should have exposure. And the most of the best is just still lying way ahead of us.
Great. Peter, thank you so much for your statements, for your insights in the silver industry, and for being here today. As I already said in the beginning, we will link your English and German-speaking version of your book in the description, also your newsletter, silverstockinvestor.com. And thank you very much. I'm really looking forward to talking again to you soon.
Jan, it's been my pleasure, and thank you for having me. Always a good time.
Thank you very much.